Lamar Villere is joining us here for Inside Out, portfolio manager at the Villere Balanced Fund. Tom White is with us in studio to do some trading. Lamar, good to have you on the program. Let's talk big top line S&P 500 first, because we're at records and things are getting a little pricey out there.
Yeah, absolutely. We're a little concerned that we've had a great year, and it doesn't look like there's a lot more room to go here.
So when we look at a market that's trading about 20.5 times trailing now, as we've discussed here, Lamar, that doesn't last very long over the last 18 months. But now the conversation is, if hedge fund managers and people who missed out on this cyclical, rotation start chasing the market, is there some more upside?
Obviously there could be some more upside, but we'd be concerned, the beta bet, or just the broad market bet that has worked out candidly great for the last 10 or so years, we think has mostly run its course.
Okay, so what do you want to get if things do pull back? What's first on the list, Lamar, that you want to own that maybe is too expensive or you already have a lot of? I mean, what's the advantage of the pullback? Tell me where you put that cash to use.
Well, it depends. The nice thing is right now we're seeing little mini pullbacks in different areas. So particularly a lot of it's driven by, the rhetoric going on with the election. So all of a sudden when you hear, it's going to be Medicare for all and single payer, you see certain healthcare stocks react very sharply. We think a lot of that's overblown. So you tend to see different opportunities arise in there. Obviously a broad market pullback, we look to add to some of the high quality names that candidly are too expensive most of the time. But in a general market where all things are rising or as expensive as we're seeing now, you see little opportunities here and there that we've been able to take advantage of.
One of the areas of the market that's gotten some strength lately has been the small caps. There's regional banks that comprise a pretty good component of that, so the yield curve steepening has helped. Lamar, do you want to try and ride that trade and the bounce back in some of the financials?
Yeah, we hold some very specific niche banks, Kearney up in the Northeast, First Hawaiian, that have really good market specific profiles. We're not really interested in buying the big banks. It's a little tough to predict what the overall banking market's going to do, but when you can pick a good geography and place your bets there, we think that's a little better way to play it.
Okay. One in the financials group that you do own, Progressive. We're talking insurance here. The stock got up to $84 this year. It's been moving over this past couple weeks, still very much up after starting the year at $58. So tell me what's going on here.
Well, Progressive right now in general, they've got their consumer policies, consumer auto policies. It's a pretty simple story. It's kind of the better mousetrap. It's cheaper to add customers without agents. It's worked for them. It's worked for Geico, the Berkshire Hathaway company. Really what Progressive's growth is coming from is they're adding bundling with home insurance. You're probably seeing some of those ads as they're starting to roll that out nationwide. They're also doing commercial auto and having some good growth there. So those two areas is where kind of the sizzle comes in the stock, but it's generally just a very safe, steady growth stock with some interesting upside that we think it's relatively reasonably priced. At about 13 or 14 times next year's earnings, you get a nice dividend yield and some good growth. We think that's a great place to be, especially if you're worried about a little bit of a broad pullback. Okay,
so that's kind of what I'm curious about. If we do get this pullback in the market, will it be coming from, in your mind, some of the stuff that has been rotating negative in terms of the momentum, some of the growthier tech, or are we going to get a surprise that, hey, maybe this is not as reflationary of a trade as we thought, and all of a sudden this kind of cyclical bounce goes kaput?
Tough to tell where it's going to come. I think, like I said, your big drivers right now are the election, and then looking at the trade war, whether it's things are proceeding faster than expected or slower than expected, that sort of thing. Particularly as relates to the trade war, we think that's an area where we are pretty comfortable that things are going to get sorted out, primarily because it's one of the few things that the president has pretty much unilateral authority to handle. So going into election, are we going to still be in a trade war? Probably not. How it gets resolved is a little unclear, but generally I think we're going to have some certainty on that in relatively short order.
Lamar, I want to talk on semi, but real quick, one of the other picks I think is pretty interesting. EHTH had an explosive run, then a pretty explosive crash. Now it's on its way back up. Is this also connected to disruption in healthcare?
Absolutely, and this is, I was referring earlier to some of the, single payer scares. So the real growth in eHealth has been on the Medicare side, specifically Medicare Advantage. And they've done a really good job of sort of dominating that market. It's 87% of their revenues right now. All of a sudden, if there's a fear in the market that there's going to be a huge change as far as the macro, that's scary. We think that's hugely overblown. But a lot of noise on that name. When they put out earnings in late October, in the aftermarket, the stock traded way off over 10%. Since then, it's risen over 30%. So. A lot of people are confused about it, but generally we think it's a great way to capture some growth. 10,000 people are turning 65 every day, and every day that group is a little more web savvy than the day before. So, in order to be able to access this incredibly complex variety of options that are available, you can go to an agent, but he's going to have a very limited number of options. This is really the sort of the better mousetrap and the way to play.
Interesting.
Or the way to figure out your health care for retiring Americans.
Yeah. Lamar, semis today on the move again on semiconductor. It hasn't broken out to a new high, still up 25% on the year. Tell me why this one is the pick within semis.
Sure. And this is another one where we saw they actually missed numbers, but the stock traded up. Why? Because people are terrified of semiconductors, and that's why we see opportunity. Again, there's a trade war overhang, but if you really look at on semiconductor, they're selling into autos. So semiconductor content in automobiles is going from roughly $300 today to roughly $1,000 in the next couple of years. So huge growth there. They're a big player. 5G rollout. There's going to be a massive increase in the number of base stations. On semiconductor is handling the power for those units. So great macro, great. They're on top of the sort of the top trends in tech, and you're not worried about picking winners as far as Verizon or is it AT&T.
Sure.
You're not worried about in the car side. You're not worried about is it Tesla or one of the legacy auto manufacturers. It's just a way to play the trend, and again, in a relatively cheap, inexpensive way to participate in that.